What is going on, YouTube Nation? This is Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So one of these stocks you guys wanted me to do a review on. I have my list actually on a piece of paper, and it's a high yield dividend stock. I'm going to reveal to you a new one that I bought in my M1 Finance dividend portfolio. And I'm going to explain to you why I like these three high yield dividend stocks. I have the percentage a little bit higher in my M1 Finance dividend portfolio, focusing on these guys. So if you're new to this channel, make sure you hit that notification bell after you subscribe. Smash that like button. Let's check these stocks out right now. The first dividend stock I'm loading up on is Kinder Morgan. I own this one. It's a very nice high yield dividend stock. Has a dividend yield of 6.18%. It's a heck of a deal right now at $17.98. PE ratio is 39.72. Average volume is 16.84 US dollars. Market cap is 40.76 billion US dollars. Year range is 1501 to 2020, and its day range was 1770 to 1801. Previous close was 1765. So what do I like about these guys? I'm on their website. Kinder Morgan is one of the largest energy infrastructure companies in North America. We own an interest in or operate approximately 83,000 miles. I had to stop and say 83,000. That's a lot. 83,000 miles of pipelines and 141 terminals. Our pipelines transport natural gas, gasoline, crude oil, CO2, and more. Our terminals store and handle renewable fuels, petroleum products, chemicals, vegetable oils, and other products. That's huge. So they have a huge pipeline. One thing that I like about these guys is they're a little diverse with the things that they transport. Chemicals, vegetable oils, petroleum products, and renewable fuels. So that's one thing that's popular. And natural gas is in demand. Now again, this is not financial advice, for entertainment purposes only, disclaimer in the description, but this is what sold me on these guys. I'm going to show you their revenue, and I'm going to show you their dividend history. This revenue is in millions US dollars. 2015 it was 14,000, 2016 it was 13,058, 2017 13,705, 2018 14,144, 2019 13,209, 2020 a little bit of a hit, 11,700. In 2021 they're at 16,610. So from 2015 to 2021 there was an increase in revenue. Took a little bit of a blow from 2019 to 2020, but their revenue is increasing. That's what attracted me, and I changed my percentage a little bit higher on M1 Finance to these guys, and I'm going to show you their dividend history. Let's start 2016, it was 13 cents. Then 2017 and 2018 it was 13 cents. Then it hit 20 cents from 2018 to 2019, and then 2019 it cracked 25 cents. 2020 it cracked 26 cents. 2021 it hit 27 cents, and then in 2022 it hit 28 cents. So in the past 5 years, the dividend growth is 16.84%. Payout ratio is a little high. I'm not too worried. They do a dividend cut. It is what it is. They're cheap and they're a deal. But right now the revenue is doing pretty strong. They have a diversity of pipeline products they bring to the table. There's a little bit of a risk with this one. And again, you bought one share, you made 111 with a 6.29% dividend yield. So right now, they said with their payout ratio, it currently sits at 103% of its earnings. Now, again, that is high. That raises red flags, but I'm sure that they will fix things pretty quick with their revenue jumping up and the demand for these guys, especially natural gas. I'm going to hold on to these guys. I can't confirm that I'm going to be long in them, but I like the way things are going to potentially have me be long in these guys as a dividend stock. So I wanted to focus on the sectors, and this is one sector I really want to focus on with Kinder Morgan. Let's jump to the next dividend stock. Next dividend stock I'm buying is Enterprise Product Partners. Its dividend yield is 7.29%. PE ratio of 12.61. The average volume is 7.72 million. Market cap is 56.84 billion US dollars. Year range was 2042 to 2865. Day range was 2562 to 2610, and its previous close was 2557. So why did I buy these guys and add them to my M1 Finance dividend portfolio? I'm going to explain to you guys. So since the IPO, they have grown tremendously, increasing the asset from 715 million to 68 billion at December 31st, 2021. This phenomenal growth is a result of expansions from organic growth opportunities as well as acquisitions. Listed below are their current portfolio of assets. Over 50,000 miles of natural gas, NGL, crude oil, refined products, and petrochemical pipelines. They have salt dome storage, approximately 260 million barrels of NGL, refined products, and crude oil storage capacity. So 14 billion cubic feet of natural gas storing capacity. Again, the natural gas processing plants, NGL and propylene fractionators, excuse me. Like literally choking on my water. So these terminals that they have right here, the Houston Ship Channel has 7 deepwater ship docks, which can load multi-products. Belmont has 5 water ship docks, which can load multi-products. The Seaway, Texas City, and Freeport locations have 4 deep water ship docks, which can load crude. Morgan's Point has 2 deep water ship docks that can load ethane. So right here, this is very important with these guys. Now, that's what I like about them is diversity, just like Kinder Morgan. Now I'm going to go over their revenue and their dividend history. Now check out this revenue and huge jump in revenue. So this is in millions of US dollars. 2015 it was 27,000, 2016 it was 23,000, 2017 29,000, 2018 36,000, 2019 32,000, 2020 a little bit of a hit, 27,000, and then 2021 40,000. So from 2015 to 2021, 27,000 to 40,000, that is attractive. Now let's jump to their dividend history. Let's start 2014, 36 cents, then 37 cents, then 2015, 38 cents, then 39 cents, then 40 cents in 2016, then 2017, 42 cents, then 43 cents in 2018, then 44 cents, then 45 cents in 2020, then 2021, 45 cents, 2022, 47 cents, and then 48 cents in 2022. So in the last 5 years, the dividend growth was 1.89%. That's kind of a given because you see, the pandemic kicking in and, issues with revenue with a lot of companies in many sectors regarding the pandemic. Payout ratio is 87%. Number of dividend increases in the last 5 years is 14. If you bought 1 share, you made 186 with a 7.27% dividend yield. This one, the dividend appears a little bit safer than Kinder Morgan. KMI is a symbol, and I know a lot of you guys want me to do symbols and mention symbols. I also have it in the description, as well as certain times when I'm discussing certain dividend stocks. Let's jump to the final dividend stock. The final dividend stock I'm going to go over is MPLX. Dividend yield of 9.08%, a PE ratio of 10.50, average volume 2.10 million, 31.45 billion US dollars. Year range is 2680 to 3549. Its range is 3037 to 3118. And its previous close was 3027. So what do I like about these guys and why am I buying more? So MPLX is a diversified large cap master limited partnership formed by Marathon Petroleum Corporation that owns and operates midstream energy infrastructure and logistics assets and provides fuels distribution services. MPLX's assets include a network of crude oil and refined product pipelines, an inland marine business, light product terminals, storage caverns, refinery tanks, docks, loading racks, and associated piping, and crude and light marine terminals. The company also owns a crude oil and natural gas gathering systems and pipelines, as well as natural gas and natural gas liquids, processing and fractionation facilities by U.S. supply basins. So let's look at one more thing. So on the Marathon website, here is their pipeline by Louisiana stretching to Ohio, Oklahoma, all the way to Michigan, Washington, Wyoming, Colorado, few locations in Texas. So I just wanted to show you their pipelines that they bring to the table. Now, I'm going to show you their revenue and their dividend history. This is in millions US dollars. 2015, 1,101. 2016, 3,029. 2017, 3,867. 2018, 7,005. 2019, 9,041. 2020, 7,569. You can blame the pandemic. And then 2021, 10,027. So look at the jump from 2015 to 2021, 1,000 to 10,000. Now let's go to the dividend history. Let's start 2015. It was 47 cents. Then 2016, 50 cents. Then it cracked 51. Then 2016, 52. Then 2017, 54. Then 2018, 62 cents. Then 2019, 65 cents. And then 2020, 69 cents. And then 2021, still right at 69 cents. And then 2021, they have a special dividend at 128. And then 2022, they just jumped to 71 cents. So the payout ratio is at 95% right now. Number of dividend increases in the last 5 years is 12. Annualized dividend growth in 5 years is 4.13%. If you bought one share, you made 282 with a dividend yield of 9.32%. So out of the three, again, all three of them, you have to pay K1s. Kinder Morgan, KMI is a symbol, is a risk. This one, MPLX, is a risk. EPD compared to MPLX and Kinder Morgan is probably the safest. And again, with the dividend, again, I am not giving financial advice for entertainment purposes, only disclaimer in the description. But a high payout ratio is always at risk of a dividend cut. But with their revenue increasing and the way things are looking and them being in demand, I think these guys are a buy, and I've been buying them. So I'm not trying to pump the stock. I'm telling you what I'm buying, and I'm revealing to you why I'm buying it and providing my rationales. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Let me know in the comment section what you think of these three dividend stocks. Tell me in order which ones you like best, and do you own any of these stocks? You guys take care and have a great Monday.